In this video, I'm going to show you all the ways in which you can use the Fibonacci Retracement Tool. And the birds are going to be chirping in the background because it's a hot day and I need to have the windows open. And we have very loud birds in the Costa Rican jungle here. So the first thing you want to do is come down to this little thing here down the bottom, which brings up the calendar so that you can put in custom range. And let us look at the all-time high, which was in 2017. So I am going to go 01-01, so the beginning of that year. And then I'm going to come down to present day, which is the 29th of May 2021 at this stage, right? So we get that in. Some coins you are not going to get the data because they're not old enough to able to give you that data. So that's that. So then here's what we're going to do. We would go to where the all-time high, down to the bottom here, where the bottom is all the way up to the all-time high. So the Fibonacci retracement is on the left. These lines here, just under the trend tool, click that. The one we want to use is Fibonacci retracement. And you want to come down to the lowest point here of that bull cycle. And then you want to go to, done it the wrong way around. You want to start at the Fibonacci retracement at the all-time high down to the all-time low of the year that we did the all-time high. And the reason for that is we want some historical data on resistance levels as well as where we could retrace back to. And you will see that we now have these really big levels that we can look at. So now we have the general in. We are going to then come to the next Fibonacci, which I like to do from the bottom of this bull market year cycle, which is just under a year, to where our all-time high is. So I am going to come, where do we start the bull run? Let me just come back here, get this up a bit. And it's a similar thing. You would go to your Fibonacci retracement tool and you would go to the all-time high. You would swing down to where we actually really started our ascent, which is at this Fibonacci level here, 17,582. You know what, you could do down at this level here, where we actually started, which was around the 0.26 Fibonacci. That's probably a little bit more accurate. So we do that. And then what this is going to do, this tool is going to give us more of a current view of the market that we are in. To let us know how high are we going to go, right? Which at this stage is looking like a potential of $240,000 unless something else happens. We might not get there, but that is a possibility. It also gives us any potential retracement levels under here to see if any of these line up with the retracement levels over here. So if we're dumping, how low are we going to go? And at the moment, it looks like we've got support at this level here from the bull run, where we did some consolidation over here to the left. Boom. And we traded above that for a while, and now we're coming in here and building some consolidation here. So 30,000 may well be the bottom of this particular market, and what we've done is we've just created a higher low from this point here of the beginning of the bull run, right? And it's still higher than the top of the last market. It's very rare that in a cycle you would come back down to that below the high of the last bull run, which was here at around 19,000. I think it's 19,500, something like that. This is a different exchange than I'm used to using. So the exchanges are slightly different. So that gives you the big general, right? So you can see that the golden ratio is here for Bitcoin. So we haven't even really reached the point where we could go crazy. We've passed the first golden ratio down here. Actually, we're under it right now, which is why people are a little bit nervous. So we've got a lot of resistance to get back up over it. But when we get up to here, we've got so much more potential to go for Bitcoin because we haven't even reached this yet in this bull cycle, which is a reason to be bullish, medium to long term. Short term, obviously, it's a bit bearish. Now, the other way you can use this tool is on the hourly or the 4 hourly to just look at a movement. So if I was going to go, what do I need to do here? Where is Bitcoin going? I'm not quite sure how far down it's going to go. Let me take a look. And I might just go, here is the high that we just had in this section of this movement, right? We came up here and we've come back down. So why don't I do a retracement to just see how much further down we might go to see if there's any confluence anywhere. And I would use the tool by going the opposite direction, because if I want to see how far we're going to go down, you need to start at the lowest. How far you want to go up, you start at the highest. Come all the way up to here. And we've got this whole movement. A whole movement is kind of like a section of the market, and you just snip it out. And here's the low and here's the high. And you will see that we have a Fibonacci level sitting at around 33,232. So it's possible price action may come back down to here. And obviously it's also possible that we might come down to 31,111. And we've got confluence there. We have a resistance line. We have a Fibonacci retracement from the larger market. And we also have the Fibonacci of this smaller one. So there is quite a lot of confluence around here for the price to potentially come back down here, in which case this would create a double bottom and then it would go back up again. So that's part of how you would use the Fibonacci tool if you were looking at wanting to figure out where this market was going, how far it's going to retrace, how far it could go up to, and all of the stops along the way. And when you have the 3 Fibonacci tools, the last market, this market, and the smaller section of the market that we're looking at right now, you look for the confluence. Where are the lines lining up? And that gives you a more magnetism is sitting here, because there's 3 lines right in this area, right? So this is a pretty strong magnetic pull to come back down to here. Cool. So then the other thing that you can do with the Fibonacci tool is just come down into smaller movements. And we want to go, how high are we going to go, and where are we going to stop, and where are we going to retrace? We could do a Fibonacci retracement like this. Start at the all-time high, swing down to the all-time low, and we could see that this line here, if we're going to come back up here, we've got 2 resistance lines here, 4 lines of resistance to get through in order to get to higher prices. So you might see that we come up and we bounce off this line, or we come up to this resistance line and we bounce off it and come back down again, or we come up here and we come back down. So that means putting in a long here, very risky unless there is a pattern that's clearly bullish, there's no bearish divergences on the RSI, and there's a lot of volume and a lot of momentum that's going to help push the price up, okay? Because you look at all of that resistance above you and you would go, if I'm going to trade, I might not wait all the way up here. I might close it here when we first hit resistance, because it might just come back down again and then you lose that profit, right? So that's another way that you can use the tool, and you pretty much just use it into any section of the market that you want to. So have fun practicing with that. I highly recommend you get a blank chart, pick a coin, pick a coin that you don't know of, that you've never heard about, as well as your favorites, Bitcoin, Ethereum, and so on, and just practice putting in your retracement tools and figuring out where we are at the market and looking at where we might go, where we might retrace to, or where we might pump to. Make a note of that. And then just watch the market and see how accurate you've been. Because the more you practice and the more you see that you actually got it right or you were close, the more confidence you're going to have in using the tool.